Welcome back. In video one of this series, we're talking about money. When purchasing a home, you have two ways to buy it. You're either going to finance it by taking out a loan and having a monthly mortgage, or you're going to pay for it in cash. Should you decide to go the financing route, there might be a couple of different loan options for you. FHA, conventional, VA for veterans, and USDA for those homes that qualify in specific areas that are outside city limits, more rural area. If you plan to go this route, you'll first want to apply with a lender. Now, I have a couple of different lenders, and what they're going to do is they're going to have you fill out an application. They're going to ask for some documentation like pay stubs and taxes, and they're going to issue you a pre-approval letter. Most lenders are looking for a credit score of 580 and above, and that you have at least 2 full years of working with a full-time job. If you go the cash route, what you'll simply do is contact your bank and ask them to issue you a proof of funds letter. This will be a letter from the bank on their letterhead stating that you have X amount of dollars in your bank account and those funds are available for you to purchase a home. Let's go over costs when purchasing a home. Now, some of these will be prepaids, meaning you will actually pay these over the next couple of days or weeks while you're under contract, and some aren't actually due until we get to the closing table. Closing on a home is usually a 30-day process. The first is option money. This is going to be a check that's written out to the seller of the property, and it's due within 3 days after executing a contract. If you continue on with the contract, the seller will give this money back to you at closing. If for any reason you decide to terminate, the seller is going to keep this money. Earnest money is also due within the next 3 days after executing a contract. This is a larger sum of money and it's held by the title company. You could almost think about it as a deposit on the home. Now, if you continue on with the contract, that money will be applied towards your closing costs. If you decide to terminate the contract, depending on the reason and how long into the contract, the seller may get to keep this or you'll get it back. My job is to make sure that that money is protected at all times for you. Once we're under contract, you'll hire an inspector to inspect the property, and you're going to pay the inspector right there on the spot to do the job of inspecting. This check or cash will be made out to the inspector himself. A survey may or may not be a cost that you have to take on. If the current owners have a survey already on the property and there haven't been any structural changes made, like a pool added or additions onto a home, then it might be accepted. If the seller doesn't have a survey, or if they have an existing survey that is not accepted because a pool or additions were made to the home, then you might be responsible for paying for this item. A survey is called out to the property, and what they do is outline the property that you are purchasing so that you know where the property lines are. And an appraisal is ordered. So, an appraiser is somebody that works for the bank, goes out, and they make sure that the value that you're purchasing the home for is market value and you're not overpaying for a home. Now, you can expect these items to be paid before we get to the closing table. Option and earnest money will be due within 3 days, and you can expect the inspection to also be due right around that time too, because we'll want to get it inspected immediately. Now, your down payment and your closing costs won't be due until we get to the closing table. Depending on what route you go with for your loan will depend on your down payment amount. And each lender has their own set of closing costs. Now, these costs can vary depending on how the offer is structured, what loan type you go with, and the lender that you choose. Knowing these costs up front will help you plan to save for purchasing your next home.